Okay, let's dive into this. When you look at a massive skyscraper, you see the steel, you see the glass. But what you don't see is this hidden world, this complex machine of people and processes that makes it either a huge success or a total financial disaster. Today, we're going to pull back that curtain and see who is really pulling the strings in the world of commercial real estate.
So, think about it. Who is in charge of that building? Is it the engineer in the basement making sure the air conditioning works? Is it the high-powered executive negotiating a massive lease on the top floor? Or is it the far-off investor who technically owns the whole thing? Well, the truth is, it's kind of all of them, but they fit together in a very specific, very organized way.
And that answer lies in what the industry calls the three-tier structure. This is basically the playbook that sophisticated investors use to manage absolutely everything, from the boiler room all the way up to the boardroom. It breaks down into three connected layers, so let's start at the foundation, from the ground up.
So our first tier is property management. The best way to think about these folks is as the ship's captains. They are on the ship every single day, navigating the immediate challenges, managing the crew, and just making sure the whole thing stays afloat and runs smoothly.
Their role is all about tactical, hands-on execution. They are responsible for the physical building itself, the nuts and bolts. And just as critical, they manage the day-to-day experience of the tenants, the people who actually work or live inside.
And their to-do list as well, it's massive. But if you boil it all down, they have to absolutely nail three things: keep the tenants happy, keep the building humming, and keep the money flowing in the right direction. And that means they're handling everything you see here: dealing with tenants, fixing leaks, managing contractors, collecting rent, paying the bills, and wading through a sea of regulations. It's a huge, operational, boots-on-the-ground job.
Now, if you're an owner, you've got a choice to make here. On one hand, you can hire a big third-party firm, like a JLL or CBRE, to do all this for you. That gives you instant scale and deep local knowledge, but you give up some direct control. On the other hand, you can build your own in-house team. That gives you total control and perfect alignment, but it comes with higher costs and HR headaches. The path you choose really depends on the kind of portfolio you have.
So how do you know if they're doing a good job? Well, one of the most important numbers, a key performance indicator, is rent collection. For any well-managed building, the target, the absolute expectation, is to collect over 99% of all rent owed every single month. That one number tells you just how critical their day-to-day financial execution really is.
All right, let's move one level up the chain to our second tier, asset management. Now, if property managers are the captains steering the ship, the asset managers are the navigators. They're not on deck swabbing the floors. They are in the map room, charting the long-term course to the most profitable destination possible.
You can think of asset management as the strategic brain of the whole operation for a single property. Their job is to take the owner's high-level financial goals, we want a 15% return, and translate that into a concrete, actionable plan for that specific building. They are, for all intents and purposes, the CEO of the property.
And you can immediately see the difference in their job description. They're not collecting rent, they are creating the entire business plan for the asset. They're the ones who approve the budgets that property management proposes, they lead the charge on negotiating with major new tenants, and they are constantly wrestling with that huge question: should we keep this building, or is it time to sell? And yeah, their report card looks totally different. It's not about 99% rent collection, it's about big picture financial performance. They live and die by metrics like net operating income, or NOI, which is just a fancy way of saying the property's total profit. Their entire job is to figure out how to make that number go up year after year and maximize the return on every single dollar the owner has invested.
And that brings us to the highest level of strategy, portfolio management. If we're sticking with our analogy, these are the fleet admirals. They aren't worried about one ship or its specific course. They are commanding the entire fleet, deciding where to deploy it across the world for maximum strategic advantage.
Their entire world is the enterprise level. They're not thinking about one building's leaky roof. They're thinking about the makeup of the entire collection of assets. Are we too exposed to the office market in New York City? Do we have the right mix of industrial warehouses versus retail centers? Their job is to manage risk and deploy capital across the whole platform. So you'll find them doing things like deciding which new markets to invest in and which to exit. They're the ones raising huge amounts of capital from big investors, and they set the overall strategy for what to buy and what to sell. They even establish the broad company-wide mandates for things like sustainability that every single property has to follow. Okay, So we've got our captains on the ground, our navigators charting the course for each ship, and our admirals directing the fleet. But here's the key, none of them works in a vacuum. For this entire system to function and not descend into chaos, they need crystal clear rules of engagement that spell out how they work together.
Which, of course, leads to the million-dollar question. With all these different people and all these different priorities, when push comes to shove, who actually calls the final shot? Who has the ultimate authority to say yes or no?
And this, right here, is the answer. This is the secret sauce. Sophisticated firms live by something called a decision rights matrix. It's the official rulebook. So for example, look at the operating budget. Property management proposes it, but it's the asset manager who has the final approval. But for a massive decision, like selling the entire property, the asset manager can only recommend it. The ultimate decision comes from the portfolio level. Having this clarity prevents so many problems.
And this slide perfectly illustrates the natural tension that exists in this system. You have the property manager on the ground saying, hey, I need to spend money on upgrading the lobby to keep our tenants happy and prevent them from leaving. At the exact same time, you have the asset manager staring at their financial model saying, whoa, hold on, we have to protect our profit margin and hit our NOI targets for our investors. The funny thing is, they're both right from their own perspective. The success of the whole operation depends on finding a balance between those two valid points of view.
So, what does all this mean for someone actually trying to build a career in this space? And maybe more importantly, where is this whole structure heading in the future? Let's take a look at how you might actually climb this ladder.
You know, there are really two very distinct career paths here. You can climb up the property track, which is very operational, starting as maybe an assistant property manager and eventually overseeing a whole region. Or you can go up the asset track, which is much more finance heavy, starting as an analyst, building financial models, and working your way up to run asset management. Now, you can cross over, but it almost always requires someone from the property side to go back and build some serious heavy-duty financial modeling skills. But the real wild card, the thing that's shaking all of this up, is technology. New prop tech is automating a ton of the routine, property-level tasks, which frees up property managers to think more strategically. And at the same time, powerful data analytics are giving asset managers these incredible, real-time insights they never had before. The result? These roles are starting to blend together, and we're even seeing some firms create new, hybrid asset operations teams to combine the two.
You know, if you want to boil this entire thing down to one sentence, this quote absolutely nails it. Property management is all about operational excellence, running a perfectly tight ship every single day. Asset management is about strategic optimization, making sure that ship is heading to the most valuable destination over the long run.
So here's the most important takeaway. Success in this complex world isn't about one of these roles being more important than the other. Far from it. The absolute best results, every time, happen when those roles are crystal clear, when communication is flowing constantly up and down the ladder, and when everyone's incentives are pointed in the exact same direction, creating value.
And that leaves us with one final big question to think about. As technology continues to blur these lines, as it automates more of the operational work and provides deeper strategic insights, which of these skill sets do you think will define the future of real estate? Will it be the hands-on operational expert or the data-driven financial strategist? It's something to think about.